Good morning, everyone. We'll start with our monthly recommendations. First, we have ICICI Bank. Current market price 1,401. We're giving first target of 1,570. So they are the second largest private bank in the country. First being HDFC. Last year they had very good results. For the whole year, their loan book grew around 15%. Apart from that, their net interest margin, which is a profitability metric we look for in banks, that was very stable. Apart from that, their bad loans, after taking into account provisions, that has also decreased. Apart from that, they also have few listed subsidiaries like General Insurance, ICICI AMC, which was listed last year. And if you look at their loan portfolio, around 50% of their loan is catered to retail. So having more percentage of loan portfolio for retail is always good for a bank because they get higher interest from retail compared to other corporates or commercial ventures. And around last week, most of the banks have released their quarterly update, and we are seeing very good advances growth for most banks. Deposit growth have not been that great, but advances growth is very good. Yesterday, Indian Bank released their result; it was very good. So we're expecting ICICI to do well as well. ICICI and SBI, they have not released their provisional update yet, but either ways, we're expecting banks to do well. ICICI result is coming on 18th. Next we have Balaji Amines. First, the current market price 2,400. First target is 2,750. They are one of the largest manufacturers of amines. Amines are just materials which are used which is the building blocks for chemicals, which is used across pharma industry and batteries and across various other industries. Speaking about this company particularly, if you see their revenue peaked around 2022. If you look at the past 6 years, right after COVID, when there was a lot of issue with supply chain, that is when their revenue really peaked. After that, Chinese dumping came. Chinese dumped a lot of their products across all over the world. So most of these chemical companies, agrochemical companies, we are seeing such poor results until last year. So last year their revenue grew around 8%, but particularly last quarter their revenue grew around 13% and their profit grew more than 60%. So we are seeing volume recovery across this industry, and one important factor with regards to this company is they are getting into production of dimethyl ether, which could be a substitute for LPG. The government has not approved this yet, but their plant is commissioned and they are starting production. It is used for other purposes also. So in case if government approves this, it is very good news. Apart from that, last year they have spent around 750 crore capex in Maharashtra. They are getting tax benefits from the government as well. So their existing products is being revamped. Apart from that, they are also getting into cyanide production. Cyanide is mainly used in mining of silver and gold mining. There are many uses. And because we are seeing this volume recovery, we are expecting them to do well this year also. Next, we have Shilpa Medicare. Current market price 620. First target is 720. The stock has really gone up over the past 1 month as well. It is a small cap pharma company. They are mainly into APIs, active pharma ingredients. They also have a small CDMO business. CDMO is a business where you do product development and manufacturing for other companies. It is a small booming segment among pharma. Apart from this, they also have formulations. They are mainly focused on oncology. Around 40% of their revenue is coming from India, remaining from US and Europe. The company, to past 3 years, they had a net profit margin of more than 20%. It's a decent growing company. Valuation wise, it is around 52 PE. It is not very high, but still relatively high for a small cap company. Again, we are expecting them to do similarly this year. They have spent heavily on R&D over the past 6 years. In FY23, they had a few issues with the debt, mainly related to capacity expansion, but they are past all that right now. Right now, their debt is relatively less, and the management is expecting that they will see good growth in CDMO and biologics segment over the next 3 years. That is something we have to see. But apart from that, result-wise, last 2 years was very good. Next, we have Raymond. Current market price 630. First target 730. So Raymond Limited is a diversified company. They have business across realty, fashion, and defense. So last year the company they split. Now most of their shares are separately listed. Raymond Realty is separately listed. Then there's Raymond Fashions and there's Raymond Limited. The company we are speaking about today, they're mainly into defense. So back in 2023, they've spent around more than 600 crores and they have acquired this company called Mining Precisions. And now they have merged them together with the core company. So they have two core business. First is mainly catered to automobile sectors. Second is catered to aerospace. The aerospace is only picking up right now. Last year their top line revenue growth was around 2000 crores. Their current order book is around 2300 crores. This is a relatively small company because they are just getting into it. The company is planning to get heavily into, they want to aggressively push towards aerospace industry because that is where the margins are high. But one limitation that we are seeing with the aerospace industry is that there is a lot of cash delays. Even if you're getting a product, by the time cash comes to you, it takes a lot of time. It is subject to there's a lot of time lag. But otherwise, company they have no debt. They have a very strong support group from their all the other from the parent as well. And one interesting thing is right now they recently roped in ex-BEL chairman to head their defense sector. So that is when this news came out, shares went up almost 6 to 8%. I think it was 2 weeks back. So then we'll have to see. We'll have to track and see how they're doing over the year. But right now it is currently relatively cheap because the business has just started. But we have to see how they do going forward. P is only 19. And finally, we have Grindwell Norton. Current market price is 2058. First target is 2310. They are an abrasive company. They are one of the largest abrasive manufacturers in the country. Abrasives are mainly cutting tools mainly used across cutting and polishing tools. One advantage they have is they have a very strong parent, Saint Gobain. They are based out of France. So they have very good parent support. This is not some very explosive revenue type company. They are a very stable company. In India, there are only two of them. One is Carborundum Limited and another is Grindwell Norton. So they grow relatively stable compared to others. They give decent dividend, no debt, no such problems. And even for such a company, it is not easy for the customers to replace them. The replacement cost is very high. So they grow gradually over the past 3-4 years, no issues. Apart from that, there is also news they are getting into semiconductor equipments and all that. But this is only hype. We'll have to really see if this really happens. But apart from that, company isn't very cheap. The other Carborundum Limited is almost trading at around 80 PE. Relatively, this is cheaper. This is, I think, 53 PE. And coming to last month's review, Nifty gave a return of 2.4%. We gave a return of 2.7%. Most of the stocks are doing well. Cipla, Sidus, Pharma is comparatively still doing very well. Lot of pharma stocks have hit their all-time high. Most of these mid-caps, small-caps, many pharma have hit their all-time high last 1 month. Cipla Sidus being large cap, they are also doing well. Federal Bank we gave, that is also doing fine. Only Triveni Turbines went down. I think Thursday there was a fall. Once Trump said that they will attack, so then it fell. Since then it has not recovered. No company specific news. Mayur Uniquoters, we have given conviction idea as well, that has achieved the target. Okay, thank you.